Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, June 7th, 2023. At our top story today, celebrating 10 years, the growth of access to real estate in U.S. DC plans. And joining me now to discuss this and a lot more, Mary Adams is the president of ECG, and Dave Skinner is the former president of the Defined Contribution Real Estate Council and former managing director for global real estate in DC plans at PGIM. David, Mary, great to see you. Thanks so much for joining us on the program this morning.
Thanks for having us, Jeff. Looking forward to having this discussion this morning.
Yeah, and we're here really celebrating the 10 years of the Defined Contribution Real Estate Council. And Dave, I want to start with you. I've got tons of questions for Mary, but I want to start with you. And take us back 10 years ago. What led to the formation of the DCREC?
Well, Jeff, that's a good question because you got to go back 10 years ago and look at the landscape that was around at that time. At that time, for the most part, real estate was being offered in a REIT structure. So public REITs were being offered in DC plans, but not robustly. We didn't have a big uptick amongst plan sponsors in the DC community using REITs. At that point, there were a number of managers who were actually launching private structures that combined both private and REITs together. But there was a handful of us. There were 3 or 4 managers, very small market. And each of those managers basically had different processes, different structures, and really a different way of communicating why you should be investing in real estate. So back 10 years ago, I would say there was not a market. If you went out to talk to plan sponsors, most of them the only information they had in real estate was about REITs. Most of them did not think that private offerings were available, or they basically just didn't think they could work in a DC structure. Consultants, for the most part, were only covering them from a reactive standpoint. If they had a client who said, I want to put private real estate in my plan, they would reach out. And again, there were a handful of managers in the space. For those managers who were in the space, we, again, all had different processes, different approaches, and different ways of bringing these structures into the marketplace. And at that point, a handful of us got together and said, to make this work, to make the pie big and to make it a real market, we need to start collaborating together. We need to start creating a discussion or a foundation where there would be common practices, common discussions about why you should be investing in real estate, and basically a collaborative approach with the public and private markets. Again, when I came into this business 10 years ago, I was surprised by the competitive spirit between the public and private markets. And when you look at the private markets and REITs and the competitiveness that was existing back then, I always used to say, why is it about private and public? Why not make the story about real estate? And that both public and private together are complementary structures to offer an outcome for participants. So we got together with the notion that, number one, we wanted to create a foundation of learning and understanding, a common language about why you should be investing in real estate, and most importantly, to start structuring our operating capabilities around daily pricing, trading, execution, pricing, recording or sharing of information in a seamless and more robust manner so that the marketplace could buy us and could invest in us, and it could invest in us with trust. So that was the reason that we got together. And over the course of 10 years, I've been really, really, really surprised and not surprised, it's probably the wrong word. I've been really proud of the amount of work that the industry has done together to make this work.
Yeah, and Dave, you mentioned a couple of them, but I want to get you to, what are the top 5 accomplishments? And I know you talked about the unification, the relationship between public and private, but if you had to pick 5, and you're not going to offend anybody here, but if you had to pick 5 of the top accomplishments, what would they be?
I would think the first one was bringing everyone together to start having a common conversation about the benefits of the asset class. That, if a plan sponsor or consultant was hearing about the asset class from 4 different managers, they would hear a similar story. So that made it easier for them to assimilate that within an asset allocation plan or some type of strategy for the DC plan. So that was the first thing. The second thing I think that came together was the idea to start creating common practices around execution, execution and structure. So in the early days, when you went to a manager and you wanted to talk about daily pricing, no one really wanted to share how they did the daily pricing, because it was almost in the manager's mind, that was my secret sauce to success. I think we learned as an industry that the operations should be common and similar, and that you can't have an operations that's going to be your secret sauce, because the marketplace just wouldn't buy that. So we got together and we started building out common practices around pricing, around daily valuation, and trade execution. And as a result, the DC community started having more confidence and belief that this could work. Probably more importantly, they didn't have to go to 5 different managers to figure it out. The industry figured it out for them. The third one, and again, I don't know if there's 5, the third one I think was probably as important as anything, is the structures around DC started to change. There was more use of custom TDFs, more OCIO platforms and TDF managers started to create structures that allowed them to invest in broader asset classes, including private markets and specifically private real estate. So that led to the catalyst of adoption and execution from a DC perspective. And I guess the fourth thing that I would say, and it's really the linchpin to our success as an organization over the 10 years. I could talk about how much money has been put in real estate. It's up to 75 billion. I could talk about how the organization started with 8 members, is up to 36 members. I could talk about how there was 1 or 2 consultants covering the asset class. Now all consultants are covering. I could talk about all that. But I think the one thing that, if I was to look at an accomplishment and an outcome that I'm most proud of, and I think that we as an industry should be most proud of, and if there's one word to define that accomplishment, it's the word trust. We created a level of trust amongst each other in the industry. We created a level of trust between the real estate market and the DC investor. We created a level of trust between the DC investor and how real estate can actually work, that it actually does work, and it works the way we said it was going to work. And that trust is really what in my mind has led to more members joining, more assets being placed, more consultants and plan sponsors investing, because ultimately that's what makes the marketplace. And looking back at the 10 years, if you would look at the very first meeting, and Mary was there, when we got together as managers, we started talking and we started saying we need to share. It was tough to get managers to want to open up. But as we met more and more, we started talking about making this work for the DC marketplace. You could see that the trust was being built, that there was commonality in how we wanted to approach this. And coming back to the trust factor, it's not just around trust for the DC. Within our own firms, we were going back to leadership in our firms and asking those leaders to change the way we process information, to change the way we executed the operating mechanics of private real estate. To get the leadership to do that really took a lot of trust on their part to believe that this market would work for them. And it has over time. So I don't know if that's 5, Jeff, but I will tell you, I could give you 10 outcomes. Trust to me is the thing that really has stood out as why this is taking off and why we now have a market that's growing and will continue to grow in the future.
Mary, Dave talked about, and you were there from the beginning, Dave talked about the growth both in the number of member firms and the types of firms. Do you want to share your perspective? You've seen it. You've helped create it. How have things evolved?
Sure. I think, initially, if you look at, 9 original founding members to 36, not exponential growth, but when you look at the market as a whole, it makes really good sense in terms of measured growth. So the membership comprises of asset managers, legal firms, trust firms, valuation firms, et cetera. So we kind of cover the ecosystem for all of the pieces that Dave was mentioning. And I did want to touch on, I know, Jeff, you wanted to talk a little bit about some of the achievements that are milestones. And I kind of want to follow up on some of the points that Dave mentioned. So one of my key elements of working with this organization and having the honor of doing so since their launch and inception in 2012 is the amount of collegial collaboration among competitors. There's an alliteration for you. But that is one way to really describe the Defined Contribution Real Estate Council. And I would say that's just unparalleled in this industry, in any other industry. I mean, essentially, that's what a trade association is, right? It's a group of competitors coming together for a single voice going toward, helping work toward a mission. And that's one of the things that I'm most proud of, have the individuals and the firms that have worked together over the years. It's just truly incredible.
Yeah, I would agree with you in that. We've featured, we've talked about that over the years. One of the things that I think is, and I want to get your thoughts about this, Mary, the research. I want to get the impact of the research, and we featured a lot of that research on our network, just about the growth of public and private real estate in DC plans. We've talked to plan sponsors along with members of the DCREC. What role did the research that you all create, so I'm living down south now, so everything is a little bit of a drawl. But in all seriousness, what role did the development of that research play in not only the member growth, but also the growth that Dave was talking about, the growth in assets, the penetration, the acknowledgement by consultants and plan sponsors?
Well, I would say, so 10 years ago when I sat down with Dave and Scott Brooks, the two first co-presidents, I was really yearning for a DC for Dummies book, because the industry, frankly, and we see it today still with member firms. It's not just me. It's not, those of us just on a call here. It is a confusing and complex industry. So I think both academic research and practitioner-led research has really helped sort of combat some of the obstacles, perceived or real, around, liquidity, valuation. We've got the whole litigation front, which I hope not to really delve into here. But there's a lot of confusion around it. And I think we've tried to dispel some of the, the misnomers there and miscommunication in this industry. So some of our research is more in-depth, academic in nature, proves the point, proves the case for why real estate. And some goes a little bit further into, and I wouldn't call this necessarily research, but alluding to those common practices or best practices in the industry so that we continue to speak and act and look the same or similar as a group of, industry professionals. Of course, each of our member firms are competitive out in the field, but at least we're starting to build some, educational resources there and help clear some of the confusion up.
Yeah, I'm one to vouch that the defined contribution industry has a lot of jargon. And you need like a handbook. You're right. You need DC for Dummies. And hey, look, anyone out there want to write that? I think it's still viable. Dave, I want to come back to you to kind of end this segment. And I mean, you both have talked about the successes of the DCREC, how it's elevated real estate in the DC industry. How has it made it? We're talking about retirement income. We're talking about inflation. We're talking about money. We're talking about debt ceiling. All that has an impact on retirement investors. So how has all this really made an impact on this industry and some of these other topics that maybe aren't necessarily directly real estate related?
Well, I think if you look at why benefits that we espouse in the industry around diversification, downside protection, those outcomes have existed over the last 10 years through all types of markets. The question around how you handle liquidity. In very tight liquidity markets, the asset class has worked well for plan sponsors. I think the proof of our success is the fact that if you look at the broader marketplace and other private equity and private debt managers trying to get into this space, they're turning to the real estate community to kind of work off of our playbook to figure out ways to actually incorporate these other private instruments into the DC marketplace. And as a result, plan sponsors kind of lean back to the real estate community to say, if I wanted to do this with other asset classes or other assets, what's the best way about going after it? So we've become the sounding board and the educational portal, I would say, when it comes to the broader private market investing community for DC plans. I think the generation of product design is still at the forefront, and there's still much more that needs to be done. Up till now, most of what you've been investing in has been core real estate. There's been more discussions around real estate debt. There's been more discussions around opportunistic and value-add real estate. There's been more discussions around packaging real estate with other real asset classes to, again, create more completion strategies. So I just think what we've created is the tipping point to future execution. And it just doesn't happen here in the US. We've had some of the global markets in Europe and other areas kind of come back to us to talk about what we've been doing here when it comes to private markets, because they're looking to do that in plans across markets and across the global space.
Well, Dave, Mary, we're going to have to leave it there. It's been great talking to you about the history of the DCREC. And we come back, we'll take a look at what's ahead. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Over the last 50 years, Mission Square Retirement has helped over 3 million public service employees retire well.
298 Washington.
298.
After 25 years of service, this will be my last radio transmission with Washington Fire Department. To my department, it has been an honor to serve this community alongside each of you. Words cannot express how much this life has meant to me. To the community of Washington, I am forever altered by our relationships. Whether it was coaching Little League or putting out one of your creative fireworks displays. Thank you. And please stay safe.
Lieutenant James Campbell, you have led our fire department with grace, grit, and courage. The department and the entire community wish you a healthy and happy retirement.
298 off the air at 1702.
While their service to their community must one day come to an end, our mission to serve them does not. We're there with them, to and through retirement. Mission Square Retirement. Invest in a shared sense of service.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Well, Mary, thanks so much for staying with us. And Greg, welcome back to the program. Long time no see, my friend.
Thanks, Jeff. Always good to be on.
Yep. And Mary, great to have you. Now we're going to be talking about what does the future hold. And Greg, I'm going to tee this one up for you. This is perfect for you. And when we've had you on talking about other defined contribution related items, but what is this event, what does this all mean for this asset class in defined contribution plans from your perspective going forward?
Sure. So when you take a look at the strong investment case for private real estate and how prolific it is in other institutional portfolios like DB plans, any other long-term institutional portfolio, real estate is a standard asset class. And so it seems probable that it'll continue to grow as an asset class in DC plans as well. But when you couple that with the increased number of DC-friendly offerings that include public and private, Dave touched on that earlier, as well as all the work that's been done with the industry and through the DCREC, standardizing practices, standardizing messaging, that trust effect that's been built. We built a lot of trust with plan sponsors as well as with consultants. Seeing how this structure works through all different kinds of markets, it's really made a big difference. And I think that when you combine all these things, the needle moves from probable to likely as an area that will grow in DC plans. However, we all know, those of us in this industry, how slowly things move and develop in the DC space, never as quick as anybody wants it to. So we know these things will take time.
Yeah, I've certainly aged considerably over the last 20 plus years. Greg, just to kind of follow up on that, up until recently, I think Dave touched on this. I mean, there's been a tremendous amount of work. And so this is not to undercut any of that, but up to this point, direct real estate, it really has only been available in custom separate accounts, custom portfolios, target date funds. And I want to ask you, you and I have talked about collective investment trusts. There's actually a bill that just passed the U.S. House, or at least a subcommittee in the U.S. House, about expanding the use of collective investment trusts. But how do CITs create that parity that we're all looking for, whether you're a small plan or a large plan?
That's right. So we had some structural things to overcome. And when you look at DC assets as a whole, collective trust funds are picking up tremendous momentum. And according to Morningstar, this is really key, according to Morningstar, among target date fund assets, collective trusts will actually overtake mutual funds as early as next year. So this is a big development. It'll really give target date funds more flexibility. Collective trusts can invest in all sorts of things that mutual fund vehicles can't do without a lot of difficulty. So alternatives like private real estate, and so it adds a tremendous amount of flexibility. And so on top of that, we have the emergence of PEPs and multiple employer plans, where smaller plans will join larger pools, and it will give them access to all these tricks and toys that have been available only to mega plans, such as investing in alternative assets. So really, when you look at all these factors combined, and you hear people talk about the democratization of alternatives, and this is really part of that. It's happening within DC plans. It's giving all sizes of plans access to these investments that were only available to larger plans, and also giving them a way to do this from a practical standpoint and from a structural standpoint.
Yeah, and Mary, just to kind of shift to you, and I know education is a big part of the DCREC. We already talked to you in the first segment about a lot of the industry-related research, but you're actually going to be having some workshops that will help. And I think this kind of goes to that trust that Greg, you, Dave, we're all talking about. There's this educational component. You've got some workshops coming up that I know you want to talk a little bit about. You can't spill the beans completely, but I'm going to push you a little bit on that. I want to hear more about it.
Yeah, no beans here. It's not a big announcement there. So annually, for probably the last 6 years, we've held a product development workshop, which is really a highlight for DCREC members. It is a member-only closed-door discussion amongst the members, where we segment each of the firms into where they are in the market, whether they're considering launching a product, launched and seeking seed capital, all the way through those who are actively raising capital. We also have sort of a vendor panel or service provider panel that talks a lot about what Greg just mentioned. So this summer, we have a panel talking about, deciding on the structure, the vehicle, et cetera, that I think will be really helpful. And just kind of tying this all together, I would say, the biggest benefit to participating in this session is that those who've had experience in the industry for so many years now, you'll hear them say to the panelists that are just launching or considering even designing a product, they'll say, how can we help you? What resources do you need? So those individuals who are competitors, again, back to what Dave had mentioned in the first segment, making the pie bigger for everyone there, are really there to support one another. And so is the organization.
Yeah. And really just an important, impressive component. Greg, I have to ask you, and I can't let you go without talking about two hot topics that we've covered with you. And I want to get your perspective about retirement income and inflation and how it relates to real estate. So I want to take what we've talked about with you in previous episodes, but bring it into this discussion. How does it all interrelate, and how can real estate help with those two big issues and challenges for retirement investors?
Yeah, sure. Great question. So I'll touch on inflation first. So first of all, it's important to point out with inflation, there is no silver bullet. There never has been. Inflation comes in many different flavors. It typically doesn't last that long in developed economies like ours, which is a good thing, thankfully. And it's always a little different than the time before. So given all that, real estate is a great long-term holding to help fend off inflation. And you just sort of think it through. It's not a perfect hedge, but it's hard to argue about, over rent growth over time. I think we all know that rents go up, and that's a key part of inflation. So it makes sense that real estate is a smart component if you're thinking about inflation and the bigger picture. On retirement income, I would say that real estate is an asset class that's a proven diversifying source of stable income. That's one of the reasons it's so common and such a standard asset class in institutional portfolios. And so it makes a ton of sense to include it in any type of retirement income strategy. And the retirement income market is still evolving. We're in the early innings, but it seems, and by the way, it's far from settled in terms of what plan sponsors and participants want to do. But one thing that seems clear is that there's going to need to be a variety of solutions, both investment-based as well as insurance-based, for the marketplace. And we feel like real estate is a great fit because of those income characteristics that I just talked about.
Yeah, well, certainly that's going to play out. There's a lot of great work that has been done by the DCREC over the last 10 years. And look, we're looking forward to hearing more about the evolution of the industry, of the group, and to see what its contributions are for the next 10 years. We'll see you guys. Well, hopefully we'll see you sooner than 10 years. But look, Greg, Mary, thank you so much for joining us, and we look forward to having you back on the program again very soon.
Thanks.
Thank you.
And that wraps up this episode of BRNAM. Have a topic of interest, somebody you think we should talk to? Drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRNAM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
But if you're tired of the same
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.